That's the
Why? Good afternoon, everyone.
Good afternoon, Bill.
How are we all doing?
God's grace, we are alive.
Thank God. We bless God. Shall we pray? Father, we bless your name. We thank you so much for bringing us together as a team and a family. We pray that you come and be with us and take absolute control. Grant us your divine grace and mercies as we go through our plans. We pray that as our exam is fast approaching, oh Lord, take absolute control, cause your angels to go and prepare the place for us so that the D-Day will come out in all the flying colors of success and declare to all nations that it was you who took the wheel. We thank you and we bless your name. Amen.
Amen.
Okay, so today we are going to start our journey into indirect taxes. Okay, so we are going to look at VAT as part of VAT administration, as part of tax administration. Now, why is VAT an important part of your exam? Now, you know you cannot do without indirect taxes, right? But when it comes to VAT administration at your level, everything about VAT you have to know. But there are some particular areas, okay, that, excuse me, that they keep examining almost always, right? Now, if you go to the exam, by all means, you can always expect something from VAT registration. You can always expect something from supplies. You can always expect something from VAT computation, right? Rarely do you see other areas. So even if other areas will come, it will be more about deductible input tax, flat rate, VAT withholding tax, and maybe invoicing, time of supply, place of supply. These are the areas, right? But the more specialized areas in value-added tax, they rarely examine, okay? Across all levels, okay? All levels, these are the most important areas in tax practice that we use to work when it comes to value-added tax. Okay, so let's look at VAT overall. What is VAT? Value-added tax. Value-added tax. Value-added tax is actually, I hope you can all see my screen. Value-added tax is a type of tax, and to understand it fully, we need to understand the special characteristics, right? One, it is a general tax on consumption expenditure, okay? So VAT is a tax on things that people buy and use. So when you buy something, a little extra money is added to the price, and that's what we call VAT. So it's a tax on spending money, okay? So when you spend money, we add something on top of it. That is what you pay. So when you consume stuff, you incur expenses. The tax on it is what we call VAT, right? And it is an indirect tax. VAT is an indirect tax because it is not paid directly to you, but paid directly by you, the person buying things, right? Instead, businesses add the VAT to the prices of the product, and you end up paying it when you buy something. So the whole thing you must understand here is the concept of the shiftability of taxes, right? And the shiftability of taxes starts with what we call the impact and incidence of tax. Okay, so when we say impact of taxes, okay, impact of tax is the first who bears, okay, this refers to who bears the responsibility, the first, who bears the first responsibility of paying the tax. Okay, who bears the first responsibility of paying the tax? So let me ask you, if I import goods from China, right, to come and sell in Ghana, who bears the first responsibility of paying the tax on the goods? Who pays tax first on those goods? Who pays tax first on those goods I've imported?
The importer.
Right? So the impact of tax is on the what? On the what? The importer, because the importer is the first person who bears it, right? But then we have something we call the incidence of tax, right? The incidence of taxation is simply who bears the final resting place, who bears the last, I get it, who bears the last responsibility. Okay, who bears the last responsibility of paying the tax, right? Of paying the tax. So this is what we call the final resting place. Okay, the final resting place for tax. So now with the goods we imported, who bears the last tax? Who pays tax last on those goods before it changes hands? Who pays the last tax on those goods if we import it?
The buyer.
The buyer, right? Yes. And the reason that is because he bears all the taxes that have been incurred by what? The importer, who is the manufacturer, would then be shifted to the buyer, right? Through the distribution chain. Now, that's what we call incidence of tax. So impact of tax is the first place the tax goes, and incidence is the last place the tax goes. Do you understand? Now, when we talk about a direct tax is a tax where the incidence and impact are on the same person. So let me ask you, the payee, they pay you, you pay at the office. Who has the impact of the payee? The pay as you earn employment income tax you pay. Who has the first responsibility to pay the tax? Is it not the employee?
Yes, the employee.
And who has the last responsibility to pay that same tax? It's still the same employee, right?
Same employee.
Yes, it's the same person because your payee cannot be shifted to another person. True.
Yes.
So in simple terms, when we say income tax, right? Income tax or direct tax, right? Direct taxes have what? The incidence and impact on what? On the same what? On the same person, right? So when we say direct tax, it means that the impact of the tax and the incidence of the tax are on the same person. But when we say indirect tax, okay? When we say indirect tax, with indirect tax, the impact is on what? A different what? A different person. What? Incident is also on what? On a different what? A different person. You understand? Do you get the idea? Do you understand it now? So you see that when it comes to indirect taxes, we have the ability to shift the impact, right? Which becomes the incidence on a different person. By your payee, your income tax, you cannot shift it to another person. Now, this is what distinguishes direct taxes from indirect taxes. Did you understand? And all this thing that is happening is due to something we call shifting of taxes, okay? So that is what we call tax shiftability. Okay, so tax shiftability can simply be what? A forward shifting strategy, okay, forward shifting, or it could be what? Backward shifting, okay? Now, forward shifting is an example of the one I gave, right? Where the importer adds all the taxes and shifts it to the consumer or the customer, right? This is an example of forward shifting, okay? So with forward shifting strategy, you incur the cost, you add the tax to it, then you shift it to another person to pay. But backward shifting strategy is where you shift it because the customer cannot pay and it comes back to the supplier or the manufacturer, whatever it is. And a typical one is a good which people know about the ruling price, right? So let's say that bottled water, we all know bottled water is what? Let's say the medium one, they sell it for you, let's say on the average 5 cedis, right? Now, this bottled water, they sell it for 5 cedis. And even if taxes increase, if you add it and sell it at 6 cedis, will anybody buy? Will anybody buy your bottled water? Will anybody buy your bottled water? Is it that you can't hear me?
Yeah, Bill. Hello.
Yeah, Oscar.
Yes, we can hear you. I was thinking it could depend on the type of commodity we are dealing with.
Yes, it depends. I'm giving a literal example.
Okay.
We all know that pure water is going for 50 pesos, right? If you sell yours for 60 pesos, will anybody buy? Something like water is an essential commodity. You know that. Immediately you tweak the price even a little, nobody will buy yours. So because of this, we are tempted to rather work back, right? That, okay, we try to reduce the cost and inculcate the taxes in there so that the customer will not end up paying more than he should. Though he will pay the tax, right? But the final price will be made up of the value plus the tax so that we get our margin. Do you get it? So because of maybe changes in prices in maybe fuel or something, sometimes they shift the way back. Maybe if you are taking transport of a vehicle and you know that from here to Aflawo is this price, right? And that is the standard price. Even if things change, sometimes when they try to increase the price, people resist the price hikes, right? So they'll be forced to push the taxes in the cost, right? So that the customer will not bear that one. And this one mostly it happens in industries where there's perfect competition, right? Where everybody's aware of the ruling market prices, right? And any little thing you do, people may take away your market share. Do you understand? Is it clear?
So, but in this instance, the supplier or the producer will have to bear the cost of the additional tax.
Of course. Of course.
Okay.
Meaning that it shifts the form of the tax to make the impact and the incidence be on the same person. Or even if it will change, because it's a whole distribution chain, let's say the importer brought the goods, right? Then he sold to the manufacturer, the raw materials to the manufacturer sold to wholesaler sold to what? Retailer, and retailer now sold to what? The consumer, right? So maybe the importer could shift it to the manufacturer could shift it to wholesaler could shift to retailer, but the consumer cannot bear because the price is sort of fixed in the market, right? So he'll be tempted to what? Bear it himself or find a way to distribute it, right? Or spread it across his various products and margins, right? So that the customer does not end up, maybe if it's a very competitive market. Please, are we okay? Are you gradually getting it? So when we say indirect tax, you should now understand why we call it an indirect tax. I taught you from an economics point of view, right? That an indirect tax is a tax where the incidence and the impact are on different persons. Do you all agree now? Have you written it down? So when we say value added tax, we could see that value added tax, when you pay VAT, it will be transferred, right? Because you can claim input for it, which reduces your impact, right? And transfers the incidence to another person. Does that make sense? Does that make sense to everyone? So
Yes,
transfer the impact to another person. What kind of shifting, tax shifting strategy is that? Is it a forward shifting or is it a backward shifting?
a backward one.
If I import goods and then I sell them to you, what kind of tax shifting is that? Is it forward shifting or backward shifting? I imported,
It's forward shift.
I paid duties and taxes on those goods. Then I added it to the price of the goods and sold them to you. Is it forward shifting or backward shifting?
Forward.
Forward shifting, okay. I own a transport company, and then there's a fixed price for the transport from here to Kumasi, and there's been an increase in transport taxes, and customers are resisting the price hike. Because of that, I bear the tax. What kind of tax shifting strategy is that?
Backward.
Backward shifting. Thank you. So we have seen that VAT is an indirect what? Tax, and we've seen what indirect taxes are based on the incidence and the impact of taxes. Now, VAT is a tax on the final consumer, and we just looked at what we call the impact and what incidence of taxes. This means that the last person who buys the product or service pays the VAT. For example, when you buy a toy, you pay the VAT on it, but the toy store also pay VAT when they bought the toy from the manufacturer. So it's like a chain of taxes, but you, the final buyer, must pay the last bit, right? Which means the incidence is on you. And one thing you must understand is that VAT is a multi-stage tax, okay? It is collected in small amounts at different steps in making and selling things. It happens when things are brought into the country, when they are made, when they are sold to other businesses, and finally, when they are sold to you. Each time a little VAT is added to the product value. So these are the characteristics that help you define VAT. And VAT is a tax on value added. When we say VAT is a tax on value added, what does it mean? Let me explain to you, okay? So if I am a manufacturer, right? Okay, if I'm a manufacturer and then I bought goods from a supplier, okay? So these are my purchases from the supplier. Are you listening? Let's say that my purchases were 100,000 Ghana cedis. Okay, the goods that I bought from the supplier, I would have what? Added my taxes, okay? For now, any amount that you get, the law requires you to add your levy. So we have NHIL, okay, National Health Insurance, which is 2.5% of the 100,000, giving us 2,500. We have Get Fund Levy, okay, Get Fund Levy, which is also 2.5%, giving us 2,000 what? 500. And then we have a COVID-19 Health Recovery Levy being 1%, okay, making 1,000, right? If I add all this, I am going to get what? 106,000 Ghana cedis being the taxable amount, right? Now, this being the taxable amount, now the law says take VAT, okay? VAT is now 15% on this one, okay? Which now gives us what? VAT of how much? 15,900, okay? Now, this 15,900, if you have this now gives you the tax inclusive amount, right? This is the amount that has all the VAT inside. Okay, that's the tax inclusive amount. Now, this one gives us 121,900. Okay, now look at this. Are you listening? This is the amount which when we bought, remember we bought this, right? These are all the taxes that are on these goods, which I'm going to pay to the supplier, right? So this is payable to the supplier by me, the business, right? This is the amount that is payable to the supplier. So to the supplier, I'm going to pay him plus all the taxes that I see in there. So if I'm supposed to separate the taxes, I will pay NHIL of 2,500. I'll pay Get Fund of 2,500. I'll pay COVID of 1,000, and I'll pay VAT of 15,900, right? Making all the taxes sum up to 21,900. Please, I hope that makes sense. I hope that makes sense. Are we all following?
Yes.
Okay, now let's continue with the game. We said VAT is a tax on what? Value added, not so. Okay, now look at something here. Since we bought these goods, right? We paid a total tax of 21,900 on those goods. Do you remember? Okay, now, assuming we decide to sell, right? So we want to now come up with our sales, not so. So we take our purchase price, the original purchase price that we bought. How much did we purchase them for? We bought them for 100,000 also. And then we added some value, okay? Value addition comes in the form of what? A profit. So let's say that we added profit. Are you getting a profit or a markup? Okay, let's say we added a markup on these goods worth 20,000, right? Or 20% of these goods. So let's say we made a profit of 20,000 on these goods, leading to selling price or sales price of how much? Now, how much will we sell these goods for? How much will we sell them for? Is it not 120,000? Is it not 120?
Yes.
Now, these sales that we have got now, if we have to find taxes on our sales, right? We call that our output what? Tax. And that output tax, we go the same way, right? We said we always start with what? The tax exclusive amount, right? That's how much we start with. And now on our sales, we are selling to the customer, right? How much will we sell to the customer? We'll sell the whole 120,000 to the customer, right? Then we are going to add the levy. So NHIL will be what? 2.5% of the same 120,000. And that gives us what? That will give us what? That'll give us 3,000 also. Then we have get fund levy, 0.5% of the same 120,000. And that gives us what? 3,000. Then we have COVID-19 levy, giving us 1% of the 120,000, giving us 1,200 also. So when we add, or what do we get for our taxable amount? We get 127,000 what? 200, right? And that is our taxable amount or our taxable value, right? So now that we've got our taxable amount, we now need VAT, right? That's our output VAT or our VAT on sales. VAT on sales is output, what you sell out. And then input is purchases, what you put in. Do you know that you must purchase raw materials before you can use it to sell? So the sale is the final product. The sale is the final product which comes out. Hence, we call it the output. And the purchases are the raw materials you put in, raw materials, labor, and other things that you put into your business to sell, right? To produce the final commodity. So we call them what? Inputs. So you put in some raw materials, labor, and overheads. So hence the name input. And then whatever comes out is what? The output. Are we okay? So our output VAT is now what? 15% of what? The 127,200, okay? And these are the taxes that you will have. 15% on this gives us what? 19,080. So when we put this together, this is the total invoice amount or the tax inclusive value again, okay? The tax inclusive amount, which is payable by the customer, okay? Or receivable from customer, okay? So this is the whole amount our customer has to pay us, okay? So the customer will end up paying us 146,280. But if you look at something, right? Look, you see that we have what? 19,080 here as our tax on sales. And we have what? What was our tax on purchases? 15,900, right? Now in Ghana, we operate the invoice credit system where we deduct all our input taxes from our output taxes. So our net VAT payable to GRA, okay, so the VAT that is payable to GRA is going to be what? Our output tax. How much was our output tax? The tax on sales. How much was our output tax? We had 19,080, right? Then we are going to less the deductible input taxes, right? We are going to less the deductible input tax. And we know this one was 15,000 what? 900, right? We could see the output was 1980 and input, that's the purchases, right? We call it what? Input taxes. It was 15,900. So when we deduct the two, we end up with what? The net VAT payable to GRA, right? And how much becomes the net VAT payable to GRA? That's 19,080 minus our 15,900.
3,180.
You get 3,180. Now look at something. We are saying VAT is on value added, right? So all this long process that we went through just to get 3,180, if I should ask you, what was the value we added to the purchases? What was the value we added on the purchases? When we bought the purchases, we added some value before we sold. What was the value we added to the purchases?
20,000.
Yes, that was the profit. And in actual sense, taxes are only on profits. Do you know that? Do you know that in effect, we are taxing the profit? See, sales minus your cost of sales should give you your profit, right? And in effect, we tax the sales and we tax the cost of sales or the purchases. So we ended up with a net tax. The same way, if I decide to only take the profit we made on these purchases and tax it, I should arrive at the same thing. Should we try and see? Let's see the tax on only the value added. And see if true, VAT is a tax on value added. So let's tax the profit that was made. How much was the profit that was made? Was it not 20,000? Okay. Now let's calculate N hill on this profit. That's 2.5%, right? And that will give us what? 500, not so. Get fund levy, 500. Of it, 200. When we put it together, what do we get? Is it 21,200? Is it correct? Is it correct?
Yes.
Okay,
Yes.
now find VAT at 15% and see whether on the value added, you do not get the same 3180. Do you get it?
Yes, 380.
So in effect, VAT is on the value that is added. Okay, the value, the profit that we added is what gave us the 3180. So VAT in actual sense is a taxation of profit in disguise, right? So any value you add to your goods and services in the effect of profit and other things that you transfer, right? Those things is what we calculate value added tax on. So value added tax effect is on profit, okay, which is the value added. Does it make sense now? So VAT is actually a tax on profits. That is the value that you add on your commodities. These are we okay? And the last feature we have to talk about is that VAT is only collected by registered businesses. So businesses that sell things collect VAT on behalf of the government. So you must know that VAT is not for you. It's not for you passing. I get it, it's for the government. When you collect, you now pass it on to the government. So remember this. Now in Ghana, our VAT mechanism is the invoice credit system, which we just illustrated, right? So we subtract the total deductible input VAT, I get it, paid or incurred from the total output VAT, which is the VAT on sales, right? And the difference is paid to the Commissioner General. If the output exceeds the deductible input tax at the end of every VAT period, normally a month, I get it, it's going to be the payable. But when it is the other way, it results in what? A VAT credit when your VAT on purchases exceed. That means you have a loss. And once you have a loss, you need a refund, right? So the tax authority must refund you your money. Are we okay? So that is how it is. And there are some conditions for refund, which we'll look at later. Okay. So that's the invoice credit system. But what we want to know is that, yes, we have input tax, which is the VAT on all your taxable purchases, and we have output tax, which is the VAT on all your sales. But however, there's something we call the deductible input tax. This is the purchases that per the VAT law or the expenses that per the VAT law, you can deduct them from your sales, okay? The purchases that if you tax it, the tax can be deducted from the tax on your sales. Not all the purchases that you can deduct their tax from the tax on sales, okay? So it's not all input taxes that can be deducted from output taxes, okay? There are some that the law allows. It's like deductible expenses. You see, when you read the Income Tax Act, right? We know that it is not all expenses that we can deduct from our profits. True or false? True. The same way to for VAT, it is not all input taxes that can be deducted from your output taxes. Are we okay? And that is a rule that you need to get. So there are so many rules regarding this. And once we get to section 48, we are going to look at what these things do mean. Is it understood? So that is it. I hope that is clear. Now, let's look at some advantages and disadvantages of VAT. Now, one, for VAT, there's less tax evasion. There's less tax evasion. So it's good at trying to catch people who try to avoid paying taxes. This means more people and businesses pay their fair share of taxes because VAT, you cannot evade VAT. Do you know why? Because it's on the price of the goods and service. You cannot say you will not pay. Do you understand? And it is simple to administer. Government will not be running, chasing people to pay VAT because it's already inculcated into the distribution system, right? The supply chain. Okay, so it is easier to administer compared to corporate income tax and other ones, vehicle stickers and other things, which even some of them are now becoming more convenient. Then it constitutes a larger part of government revenue. So when you look at government revenue, about 70% comes from VAT, more than that actually. Then it is transparent and there's less burden. Okay, so VAT is clear and it doesn't put a heavy burden on consumers. It is collected in small amounts at different stages of making and selling things, so it doesn't make prices skyrocket. That's why it has been inculcated into the distribution chain. And VAT encourages exports, right? It can encourage businesses to sell other things to other countries because VAT sometimes is when you sell goods in other countries, the VAT becomes what? Okay, it becomes zero rated. So it encourages or promotes export. And it helps control smuggling. So VAT can help stop illegal trading or smuggling because it's harder to avoid paying taxes. And actually, VAT is based on the value added, right? So it's not charged on the full, but only on the extra value
Hello.
that businesses add to it.
Are you ready to eat?
Okay. Are we okay? So we just saw that VAT is computed on the value added. Are we okay? So this means prices don't go up a lot because of VAT. Okay, because it is a net tax. It is on the value added. And many people pay VAT. So it's fair and everyone contributes. It's not discriminatory. You get it? So these are the advantages of VAT. And in exam, though, I'm not going to ask you all this. You can provide some of them from your own mind based on your own point, right? But what are the disadvantages? Sometimes setting up and running a VAT system can be expensive for the government because it requires a full billing system, invoice credit. And it is complex. Gradually, the VAT system is becoming more and more complex. Before, you just slash 15% for VAT on the gross amount, slash 15% NHIL, you are gone. But now, you have to add levies, okay? Get your taxable amount, apply VAT. When you come to customs too, you have to get your cost, insurance and freight, add duties, add import excise, add special duties, get your duty inclusive value, add the levies. Before you now come and get a taxable amount, then you now add VAT. So our VAT system is becoming more complex and complex by the day, right? They are inculcating more and more complexities, which make it difficult to account for, right? And the need for awareness. People also need to be aware and follow the rules for VAT to work well. If they don't, tax evasion or the mindset or the activity of not paying taxes can become a big problem, right? So it is costly to implement, can be a little complex, and then there's a need for education and awareness, right? The awareness or the need for education is low. So people always do not see the need why they should be paying taxes to government, right? So this is about the mechanism of VAT. Any questions so far? So that we move to VAT registration requirements. Any questions so far? Any questions so far? So everybody is okay. Okay. So let's look at how to register for VAT. It doesn't mean that anybody at all can take VAT, right? You have to register. So VAT is collected only by businesses that are registered agents, okay, of the authority to collect the tax on behalf of the Domestic Tax Revenue Division of the GRA. However, not every business qualifies to be registered to charge VAT. So let's look at the registration requirement as per the VAT Act, right? An unregistered taxable person engaged in a taxable activity shall register if, for a period of 12 months or less, the person makes taxable supplies exceeding 200,000 Ghana cedis. Okay. So if within any year or less than a year, you make more than 200,000 Ghana cedis worth of sales, you have to register for VAT. Okay. Or if within any month, you make supplies and you have a reasonable expectation to believe that within the year, you are going to make more than 200,000 Ghana cedis, then you know your business well, then you need to register for VAT. Okay. And then once you want to register for VAT, you must file an application within 30 days after the end of the year. So in simple terms, if you are in Ghana and you are running a business and you make more than 200,000 Ghana cedis a year, or you expect to make that much in the next year, you have to apply to start paying taxes within 30 days after the year ends, right? And it helps government to keep track of businesses and collect taxes from them. Okay? There are other conditions, right? That at the end of any 3-month period, if you made taxable supplies exceeding 50,000 Ghana cedis, and you are required to what? File the application for registration within 30 days after the 3-month period. Did you get it? 30 days after the 3-month period. So let me give you a typical exam scenario. So let's look at James Labby, right? So James Labby started business on, are you writing? On 1st January 2024 and has the following information regarding his sales for the following month, right? For the following month. So let's see. So in January, James made sales of 10,000 Ghana cedis. In February, James made sales of 28,000 cedis 500. In March, he made sales of 39,750, right? And then they're asking you all purchases constitute 70% of the sales, right? The required. When should James register for VAT? And compute the net VAT for the month of March. We don't have time, so we are not going to do for all the months. So my question is, it says what? At the end of any 3-month period, if you anticipate that you're going to make more than what, 50,000, I get it, or you make supplies exceeding 50,000 in a 3-month period, then 30 days after the year end, you have to register for VAT. So based on that, we have a question here. So my question is, should James Labby register for VAT? Should James register for VAT?
Yes, he must register.
And if so, when should James register? And if so, when should James register? That's the question. And if so, when should James register for VAT? You said he must register. Oscar, you didn't give us the reason why he should register. And when should he register?
Yes. Okay. First of all, he should register because within the first 3 months, the total sales exceed the 50,000.
How much was the total sale? You need to tell us the exact amount.
Oh, okay.
He made sales of what?
That he made sales of 78,250.
That's exceeding 50,000, right?
Exactly.
So he should have registered for VAT. And when should he register for VAT?
Good. He's supposed to register for VAT within 30 days after the 3 months period. So by the end of April, he must register.
Thank you. by the end of April, he must register. And the question said all purchases constitute 70% of the sales, right? And we need to calculate VAT for what? March, right? So let's get his purchases for March. So what becomes his purchases for March? Purchases for March is what? 70% of what? 39,750, right? Okay, 39,750. What would that be?
That would be 27,825.
27,825, right? So now we need the net VAT, okay? So first of all, let's get our VAT on sales, right? Know that what was the March? The sales is what 39,750, right? So now I just want you to get used to this. So our tax exclusive value is what? 39,750. That's all. Then what are we going to add? What will we add? I want you to get used to this. Hill, right? National Health Insurance, 2.5%. That gives us what? $994, right? I'm just rounding off. Then we have get fund levy being 2.5% by 39,750 still. That's the same 994. Then we have COVID-19 health recovery levy being 1% of the same 39,750. And that gives us what? 398. No, so when we add this up, we get what? 42,135. No, so as our taxable what amount. Then what then do we get? You get our VAT, which is now 15% of our 42,135. That gives us what?
That's 6320.
320, right? Okay. So that is our VAT on sales. So this is our output VAT. So now we need what? Our input VAT as well, right? So VAT on purchases. So we need our input VAT, which is our VAT on purchases, right? I can easily find the VAT on purchases by just finding 70% of this 6,320. Since all purchases were 70% of the sales. Do you remember? Do you remember? But anyway,
Yeah.
let's rework it. Need to rework again so that it sticks. So what's the purchases, which are exclusive of VAT? What was our purchases? It was 27,800.
27,825.
So we get our 27,825. We add N-Hill. N-Hill will be 2.5% of our 27,825. And that gives us
That's 695.6, or let's say 696.
696.
Okay.
Fund levy. It's also going to be 696. COVID-19 health recovery levy will be 278, right? So what's our tax
Yes.
amount? $29495, right? And then our input VAT Input VAT is going to be 15%. About 29,495.
That's 4424.
4424, right? Take 70% of this 6320 and see whether you still don't get 4424. You get the same thing, right? So that's our input VAT. So in that case, to get our output VAT is just going to give us what? Our to get our net VAT, it's just going to give us our output VAT minus our input VAT, right? And we assume that all the VAT is deductible. So how much do we have? 6320 minus 4424, right? 6320 minus 4424. Okay, which is
That's 1896.
1896. And actually, if we look at it carefully, it says that all the sales, all the purchases for the company are 70% of sales. That means profit is 30% of sales, right? So we can easily get the net VAT by just taking 30% of this, which is the value added, right? So that is it. Okay, so that was it. I hope it was a good exercise. Now, we are saying that at the end of any 3-month period, if you make more than 50,000 cedis, you have to register 30 days after, right? Now, if there are reasonable grounds to expect that the total supplies made during the period and to be made during the next 9 months will exceed 200,000, right? Actually, when the next 9 months exceed 150,000, you have to register for VAT. Okay, so if you expect every 3 months you make more than 50,000, then in 9 months you can make more than 200,000 or more than 150,000, right? So the whole thing is that 3 months, if you can make 50, that means every quarter, if you make more than 50, in 9 months, you make more than 150,000. Okay, do you agree? Do you agree? And if so happens, within 30 days, you have to register. If you have reasonable grounds to expect that you are going to make it, you have to register. Okay. So when should you apply for registration? Just so that what you must file for registration within 30 days after the end of the month. Now, if you are required to register for VAT, okay, you must register or your application must be in the form and manner that is prescribed by the commissioner. Are we okay? So that is the rules for normal registration of VAT. Those are the simple rules.
Bosville,
Yes, boss.
so in the example that we looked at, assuming in February, the amount there, if let's say it's about 42,500, then it means the 50,000 threshold after end of February would have been reached, and therefore the 30 days will take effect from that day.
Yes, of course, you can register. And even if you look at it, you use a 3-month threshold. So even though the 2 months, right, then one will be voluntary, but then if within 2 months you have exceeded 50,000, then within 3 months you would have crossed 50,000. We use 3 months to do it so that in 9 months' time we would have exceeded that 150,000. Do you understand? So if you have exceeded that in February, that means in March you have still crossed. So you have to register in April.
Okay.
But however, it's not wrong. It is better if it exceeds in even January. In January, if you make more than 50,000, you anticipate that you will generate more than 200,000 at the end of the year. It doesn't mean that immediately you make more than 50,000 in the 3 months, you have to register. You also have to look at your business. So people don't talk about this side, but you draw an appropriate budget. You know your business well. Do you know that some months are good and some months are bad? So it could be that maybe for the first 3 months, things were going well. But the next month, things will not go well. Do you understand? For instance, during the month of, during January down to March, and you are selling ice cream business, you are going to see a boom. Do you understand? But somewhere April going, and when the rains start coming, then you see people are cold. They don't want to eat ice cream. Then you see the business will be dropping. Do you understand? So imagine such a business. Then you are saying that, okay, I anticipate that I'm going to generate 200,000. When your business is a peak and trough business, right? It's seasonal or intermittent in nature, right? So if something like this happens, how are you going to really anticipate that 200,000 that you are planning for? Do you understand what I'm trying to say?
Yes, please.
Okay. So we've seen the basic threshold for VAT, but now we have to look at some exceptions regarding threshold. Then this thing pops up in exam a lot.
Hello, Bill.
And Oscar.
Sorry. So let's assume that within the first 3 months, you met the 50,000 threshold and you registered. By the various months before the year end, you're not able to meet the 200,000 for the whole year. What happens? What do you do?
Oh, you have registered already, so that is it. When you get a chance to deduct your inputs. So
Okay.
registration is not actually a bad idea, right? For me, all clients that I meet, I tell them that, you know what, even register for voluntary VAT because at
Okay.
least it helps you to deduct your inputs. Do you understand? Because already all the VAT that you account for, you are paying all, and you've already paid VAT on goods that you bought, and you lose if you don't register for VAT actually. So VAT registration is actually a good tax planning mechanism for people, right? But the whole thing is that it exposes your affairs to GRA scrutiny because they now see what you are doing. They can gross up your VAT to get your actual income and stuff like that. Do you get it? That's the only disadvantage, but I think VAT registration is good. So if maybe things didn't even go well, you can still deduct the VAT on your purchases from the VAT on your sales, right? Oscar, are you okay now?
I'm fine, sir.
Okay. Any other question?
Okay, dear.
Yeah, Abib.
Dear.
Yes, boss.
Yeah, so please, this is the case. Yes, I have contract with the government of Ghana who advance payment to me at the end of the year. Meanwhile, I will buy material for which they charge me VAT on. So monthly, how am I able to compare my deductible, my input VAT and that of the output VAT to be able to pay the net VAT payer?
Okay. Yours is in the form of a contract, right? So that means at the end of the contract, that is when your actual,
Yes,
that's how your actual revenue will be determined, right? Is that not what you are saying? So now there's
yes,
there's only input.
yes,
Is that not what you are saying? Hello, Abib.
yes, yes,
So the whole thing is that
yes, Will, that is it.
so far as now, there are only inputs you can write to the authority, right? So far as Abib, you are registered.
Yes,
And you are already registered for VAT, are you not?
yes, yes, I've registered.
Just on a contract basis. Is that Abib?
Hello? Hello?
Sorry. Habib, that's what I was saying. Can you hear me? I'm saying that you are already registered for VAT, are you not?
Yes.
And once you're already registered for VAT, it means that because of this contract, you are not getting the sales from the contract. Not so, until the contract ends. Or, is that not what you're saying?
Yes. Yes.
Thing with VAT
Yes.
that all the input that you have had from this contract, is there no way you can spread this the month? Mostly for contracts, you write to the authority so that you find a way of spreading it. Otherwise, you can only claim the inputs, but inputs must come with outputs.
Yes.
That's what I'm saying.
Okay.
Do you get
Thank you.
Do you get it now?
Yes, sir. Yes, yes, thank you.
Because there are some contracts where the people, let's say until 3 years, when you are done with the contract before, you are going to now start getting the money. But you've bought materials, you've bought other stuff, right? So you've already incurred input with no output. So what then is the next thing? People write to the authority that is the nature of the contract that they are in, and they want to request from the Commissioner General to be claiming input. That means you are only going to be claiming input. But when the actual contract income comes, you are going to only account for the output, okay, in subsequent periods, so that the net effect will still show in all the payments that you have made. Or you find a way to spread the income through the various months that you buy the inventory, or you buy all those, or you get those expenses, right? So it's all on the decision you are going to. I hope that makes sense.
Okay, sir. Thank you.
You're welcome. So shall we proceed? So let's look at the exceptions regarding threshold. There are some people that do not follow the normal VAT registration requirements. So it means that even if you decide to go with the normal VAT registration, 200,000, they don't have to meet the 200,000 rule, right? But they still have to what? Register for VAT. Okay, that is what we call the exceptions regarding thresholds. The exceptions regarding thresholds. I hope that is okay. I hope that is okay. So when we talk about exceptions regarding threshold, there are three persons which we look at. The first one is a promoter of public entertainment. The second is an auctioneer. And the third is a national, regional, local, or any other authority or body in the country that carries on a VATable activity, an activity that VAT can be charged on. We call that a taxable activity. Okay. So let's look at them. Please remember, this thing comes to exam between, sometimes it comes for 15 marks, sometimes 10 marks, okay, sometimes 5 marks. It depends on how deep they want you to go, right? So with the exceptions regarding threshold, we are dealing with a promoter of public entertainment, an auctioneer, a national, regional, local, or other authority or body that carries on a taxable activity. Now, the first is a promoter of public entertainment. Now, if someone organizes events like concerts, shows, or entertainment for the public, right? They must register for VAT no matter how much money that they make. Then they have to do this at least 48 hours before the event starts. And if they expect to make more than 10,000 Ghana cedis in the show, okay, so 48 hours before the public event or that public performance starts, right? You need to what? Register for VAT. And you only register if you expect to make more than what? 10,000 Ghana cedis from that show. But Jerry, they want money, eh? If it's less than 10,000, they will not bother. If it's more than 10,000, you have to register. So what then is a public entertainer? A promoter of public entertainment. Now, according to section 65, right? A promoter of public entertainment is someone who organizes events like concerts, plays, comedy shows, dance performances, circus acts, or festivals that are open to the public. But it does not include events that are organized by approved educational institutions like schools and colleges, the Schools Board of Management or PTA, approved religious organizations, and approved charitable organizations. So anything apart from the ones organized by this group of persons is considered a public entertainment, okay? Or the person who promotes it becomes a promoter of public entertainment. So far as he's not a school, he's not a board or management of a PTA, he's not a church, he's not a charitable organization, and he's an individual or a business that shows for a living or that shows to get money. He's a promoter of public entertainment, right? So what then is a public entertainment in itself? Now, a public entertainment means shows or events that people can attend for fun and enjoyment. This includes things like music concerts, plays, comedy shows, dances, circus performances, festivals, or similar events where the public is invited to come and watch. Are we okay? So that's public entertainment. And we know that if you're a promoter of public entertainment, just 48 hours before the event starts, and if you expect to make more than 10,000 Ghana cedis, you have to register for VAT. Is that okay? So the next person which we have to look at is an auctioneer. Now, if you become an auctioneer, a person who sells things to the highest bidder, right? You have to register for VAT within 30 days of becoming an auctioneer, regardless of how much you make, okay? So as an auctioneer, automatically you have to register for VAT, okay? And then in accordance with section 65, it defines an auctioneer, right? As a person who is what? Who is A, qualified under the Auction Sales Act, 1989, the PNDC Law 230, or any other applicable law as an auctioneer, and B, an agent for and on behalf of another person engaged in a taxable activity that pertains to the supply of goods by auction. So in simple terms, an auctioneer is a person who has the proper qualifications and is authorized by the law, that's the Auction Sales Act, to conduct auctions. They act as agents for other people or businesses who want to sell goods through auctions. So an auctioneer is like a professional who helps other people sell things by auctioning them off. And then if you're an auctioneer, right, within 30 days of becoming an auctioneer, regardless of the amount you are going to generate, you have to register for VAT. Okay, these things you have to remember them. Then when you are a local, regional, or other government authority, right? If you engage in a VAT-able activity, you have to register for VAT, right? You don't follow the threshold rule. So within 30 days after you start your taxable activity, you have to register for VAT. So remember the exceptions, the VAT registration, and the exceptions regarding threshold. Is that okay? So let's look at the period for becoming a taxable person. Now, if you are supposed to register for VAT, but you don't do it, you are still considered a taxable person. So far as you are due for registering VAT, the law deems you as a taxable person, okay, already, if you have already reached the time to register. This means that you have to follow the tax rules starting from the beginning of the tax period when you were supposed to register, even if you haven't officially registered yet. In other words, you can't avoid paying the taxes just by not registering on time. The tax rules still apply to you from the moment you were supposed to register. So if the commissioner assesses you and he sees that you were supposed to register for VAT in January, they will start accounting for the tax from January, even though you have not registered yet. Okay, so if you are supposed to register, you don't register, they will register you because it's a requirement, right? So let's look at the notice of registration. Now, when you apply for registration, the commissioner has to let you know whether your application is approved or not. And there's a time limit for the notice, right? The commissioner has 30 days from when they will receive an application to give notice about the decision. So within a month, the commissioner will tell you if you will be registered or not, okay? So within a month, the commissioner is going to tell you whether he will register you or not, and he'll give you the decision. So if the commissioner doesn't send you any notice within those 30 days, that means he has decided to approve your registration. If it's silent, okay, if the commissioner is silent, it means that the application has been allowed, right? They have allowed you registration, or they have registered you. Now, sometimes the commissioner will need extra information from you to decide whether they can register you, right? If this happens, he can ask for additional information within 30 days of getting the application, right, from you. And once they get extra information, the commissioner has just 14 days to make a decision. So I have 30 days, right, to register you. But within those 30 days, I can require information from you, right? And then if I get the information from you within 14 days, I must register you, okay? So that it doesn't exceed the 30-day threshold. So if you apply to register for VAT, the GRA should tell you in about a month if they can register you. And if you don't hear anything in time, it's like they have approved you, okay? If the government needs more information, they can ask for it, and then they have about 2 weeks to decide once they get that extra information from you. So this is about notice of registration. I hope you understood it, and you understood it well. Any questions so far? Now, let's look at certificate of registration. Now, when you successfully register for VAT, the commissioner will give you a special certificate. And that special certificate, I get it. You must put the certificate up where you do your business, right? So it's like hanging up a sign to show that you're officially registered for VAT. And this one helps everyone know that you are following the tax rules. And this is a sample registration certificate for a company, right? Which I picked up on Google. So you can see it has the number, the registration number, has the GRA logo, value added tax certificate registration, your TIN number, certified that the company has been duly registered for VAT. And when you go to a lot of business premises, you see that this thing is hanging there, right? I hope that's okay. Understood. Understood.
Yeah, please, yes.
So let's look at your registration name. Now, when it comes to individuals, right? If a single person is registering for VAT, the registration name will be the person's own name. However, if the application also mentions a business name that the person is using, then the registration name will include both the individual's name and the business name, okay? Are you listening? So if you're a sole proprietor, the registration name will be your own name. However, if you have a business name, then the registration name will include both your name and the business name. Okay, please keep this in mind. What about a partnership? Now, if a partnership, which is a business owned by more than one person, is registering, the registration name will be the name of the partnership. For individual, it's both your name and then what? The business name. For partnership, it's the partnership's name. In any other cases, like a company or whatever entity, right? The registration name will be the one that is written on the application form. Are we okay? So let's look at notice of cancellation based on your turnover. Now, the Commissioner General can also send a written notification to someone. And this notification will tell the person whether they have made taxable supplies or selling things that are subject to VAT, right? Either below or above some certain turnover threshold, a specific amount of sales. Now, depending on whether their sales are above or below the threshold that the commissioner's notification informs you, right? The commissioner will inform you through the notice if you need to register as a taxable person or if you don't need to. In simple terms, the GRA can send a letter to someone to let them know if their sales are high enough to require tax registration or not. Make sense? Does that make sense?
No, Bill, can you take that again? Not too clear.
The commissioner
Yes.
write to you. That one you have no say. He can write to you and say that he thinks based on the returns and things you have filed, right? Your income is above a specific threshold, so you should register for that or not. That is all.
Okay.
Oscar, you okay now?
Yes, I'm fine.
So let's look at where we have groups, okay? A group company or group of companies, right? Now, if two or more companies want to be treated as a single group for tax purposes, they can apply to GRA. And each of these companies must already be registered as a corporate body in Ghana. And they should have a physical place of business in the country. So that means a PE or a branch which does not have physical presence in Ghana. Maybe they're operating through maybe a simple office, right? Through one person. That will not apply, right? In this group, one company should have control over all the others, right? The parent company or one who is in charge, or one company should control all the members of the group, okay? Before this one, the commissioner can allow. Now, how do we decide or how do we designate taxable persons in groups or divisions regarding VAT? Now, if a group of companies want to be treated as one taxable entity, they can ask the commissioner for this designation. And this means that they'll be treated as a single entity for tax purposes, even though they are separate companies, okay? And if a company has different parts or divisions, it can apply to register one or more of these divisions for tax purposes. Okay, so you can pick one person and then what? You register one or more of those divisions for tax purposes, right? But most of the time, one entity will be in charge of all of them. Are we okay? So let's look at the tax liability in terms of group registration scenarios, okay? Now, if a group is designated as one taxable entity, every member of the group is responsible for any tax liabilities as a whole. This means that they share the responsibility, and if one company in the group owes the taxes, we assume that all the others are also responsible for paying those taxes. Are we okay? So in simple terms, companies in Ghana can apply to be in a group for tax purposes if they meet certain conditions. And they can also choose to register their different business parts separately if they have distinct divisions. If they're in a group, they are all responsible for any taxes that are owed by them as a group, right? So let's look at formation and registration of a group. Now, a group of taxable persons can apply to be treated as one designated taxable entity for tax payment purposes. And the Commissioner General can, one, approve their request to form a registrable group and choose one member, are you getting it, to be the group's tax representative and officially register the person as a group. Okay, so remember this thing, I mentioned it earlier. So you can add or remove members from the group, right? That's what the commissioner does. So before he can register the group, he can look at members who are not worthwhile and include some of them and take some of them out, right, from that group and account for them separately, that these people cannot be part of this group for VAT registration purposes, right? So that is it. So after the group registration, the Commissioner General can take several actions by sending written notices to the group, right? And in that notice, he can appoint one member as a rep for the group. He can include another company into the existing group or remove a company from the group. He can cancel the group registration if it's necessary for effective tax collection. So the commissioner has a lot of power when it comes to dealing with groups. So in simple terms, the group of businesses can ask to be treated as one for tax purposes, right? And the Commissioner General can approve, appoint a representative or register them as a group. The commissioner can also add or remove group companies, right? Companies from the group, or cancel the group registration if it will help him in his tax collection. What about registration of divisions? Now, when you have separate divisions, okay, and you want to register this separately for tax purposes, you need to apply for separate registration so that each of them have their own separate VAT certificates, okay? They should specify these divisions in the application, especially if they have more than 2 branches or divisions. Now, if you have branches in different locations and those branches are involved in taxable activities, the main business should apply for separate copies of registration certificate for each branch. And each branch will now get its own certificate, as I said earlier. If the business starts a new taxable activity different from one they originally registered for, and this new activity has branches, they should now apply for a new certificate for this activity, okay? Now, sometimes, if you want to register your branches separately, because you require, mostly we are supposed to only give you one certificate. If you want more, then you must pay a fee, right, to get all these separate divisions, what, a certificate. Now, if your certificate gets lost, damaged, or destroyed, you can apply to the commissioner for a certified copy of the registration certificate, and you will need to pay the determined fees for these services, okay? So another area which is very important after you look at divisions and all that is for non-residents who provide telecommunication or electronic commerce services in Ghana, right, who are not yet registered, okay? If someone from another country who is simply a non-resident is not registered for tax, I get it, but provides telecom services or electronic commerce, that's e-commerce or online businesses to people in Ghana, and they make taxable supplies exceeding the 200,000, they have to register for VAT. Okay, so the Commissioner General can allow non-resident persons providing telecom or electronic services to register for VAT and submit returns and handle tax payments electronically. And these permissions can be granted in writing, and the Commissioner may set certain conditions for these persons. Okay, so mostly, you know, these non-residents are not in our country and they use agents. So what are the responsibilities of the agents that these non-residents use? Now, if someone in Ghana acts as an agent for a non-resident who is supposed to register but hasn't, the agent must register on behalf of that non-resident person, okay? And an agent can be anyone represent the interests of the taxpayer, whether or not there's a formal contract between them, right? So in simple terms, if a foreigner or a foreign company which provides telecom or e-commerce services to people, are we okay? Meets the normal sales criteria, that's the VAT criteria, 200,000, they have to register for VAT, okay? And then the GRA can allow them to do so and handle their tax related issues what, electronically. Now, if someone in Ghana represents the interests of such a company, they also have to register on behalf of that company. What about government entities? Now, ministries, departments, agencies, statutory bodies, district assemblies, departments, agents, all of them, right? The MMDAs and the MDAs, and then all these other agencies. If they engage in a taxable activity, that means an activity that is VATable in nature, right? That is subject to VAT in nature, they have to register for VAT. And this includes activities like when they hold auctions, when they rent out equipment, when they lease or rent out space, when they engage in any activity that is typically done for a profit, right? Then they have to register for VAT. Are we okay? So these are the rules. Now, sometimes you may be required to register voluntarily. It's up to you. Maybe you feel like input taxes are eating all your money. So you can apply voluntarily, right? Even if you're not registered, you are not required to register for VAT. You can choose to apply for registration voluntarily, okay? So the Commissioner General will register you as a taxable entity if you have a fixed place where you live or you do business. That is when you want to apply voluntarily, right? For voluntary registration, some conditions must be met. You must have a fixed place where you live or do business. You must maintain proper accounting records related to your business activities and consistently submit accurate tax returns. Okay. If the Commissioner General believes that you are suitable and trustworthy for registration, then he'll register you voluntarily. So in simple terms, if you want to register for VAT, even though you don't have to, you can do so voluntarily. And the Commissioner will check if you meet certain criteria like having a fixed place of business, maintaining good financial records before approving your voluntary registration. The same way we have voluntary registration, we also have compulsory registration. Okay. So if you are required to register under VAT law and you don't register, right, the commissioner will register you by force. So the commissioner will register you by force. And if they send you a notice and you still don't apply, the commissioner can issue a warrant, which is a formal order to lock up or seal off your business premises until you apply for registration. Do you get it? So the commissioner shall seal off your premises until you register for registration. And it can even involve the police. Okay, request help from the police when carrying out these activities like blocking your premises because you may get aggressive. Okay, so in simple terms, if you are supposed to register for VAT but you don't, the tax authority can send you a notice to register you within 30 days. If you still do not register, okay, your business premises can be locked up and the police can assist in the process. And this ensures that everybody who is required to register for the VAT does so. Okay, now what are the premises? Are you getting it? And the penalties for not registering, the premises for not registering, or the sanctions for failure to register. Now, if you are required to register for VAT but you don't, you can face a penalty. And the penalty can be twice the amount of tax that you had to pay from the time you were supposed to apply for registration until you finally apply. So if you were supposed to apply last 3 years, May, up till now, we'll multiply all the taxes you were supposed to pay up till date times 2. Okay, so that is it. 2 times the tax you were supposed to pay down from the time you were registered, you were supposed to register till date. Now, if you change your business, right? If you are registered for taxes, I get in it. There are certain things you need to do. Anytime you are about to change the nature of your business, like you stop operating your business, you sell the business, you change to a new location, you change the ownership of the business, you have to inform the Commissioner General within 14 days that happens, right? So that is it. Then the last thing we have to talk about is cancellation of registration. Okay, the Commissioner General can cancel a person's registration under certain circumstances. Okay, that your registration may be cancelled if 1, you no longer exist, you are no longer engaging yourself in a taxable activity, you are neither required nor eligible to register, you have no fixed place of business or a fixed place of abode, you haven't maintained proper records of accounting related to your business activity, you do not submit regular returns, and you have committed an offense under the tax law. If this criteria is being met, they will cancel your registration. Okay. So if you had voluntarily registered, right? I get, even though you were not required to, you can request for cancellation of your registration only after 2 years from the date where we registered you. So we are saying that for voluntary registration, once they sign you up, unless the commissioner himself deregisters you or cancels your registration, you can only ask for cancellation of registration only after 2 years have elapsed. Is that okay? So why should we register for VAT? The advantages of VAT registration is that it gives us an input tax credit, right? We can deduct our input against output. It gives us an interest-free short-term borrowing because the VAT that we take will be with us for like 1 month before we can now pay, right? The last working day of the next month. So free working capital with no interest. And then you become an attractive supplier because people want to buy with people who have registered for VAT so that they can claim the input tax, right? And then it comes with the responsibility of maintaining proper record keeping and reporting, right? Which are the advantages of VAT registration. Okay, so That is VAT registration, and basically what I wanted us to look at today. Okay. In our subsequent session, we will start looking at the structure of the VAT Act. We are going to look at supplies, tax point, place of supply, time of supply, then deductible input tax, and then we dive into tax representatives. Okay. I hope that is okay. Any questions so far? And you see, these things, they, my time when I read these things, I never understood them. But they're actually practical things. So just make sure that you go through the past questions. They come all the time, especially every night, there's something on registration. Whether you like it or not, you see a question on registration. And I just hope that you can answer them, excuse me. Any questions so far? Any question? That means nobody has a question. Habib, you wanted to say something?
No, please, I just joined.
Oh.
I was.
What about Oscar? Any issue?
Please no.
So
I'm fine.
today was only about VAT registration.
Yeah.
It was a short class, but I hope it was okay. You learned something small. So
A lot.
that was it about VAT registration. And I told you every night VAT registration comes, whether you like it or yes, you get a question of VAT registration. So I'm just telling you so that you prepare. So VAT registration, I hope I simplified it for you. I didn't make it so complex. So if you apply for registration and then you submit the registration application and the commissioner requires an additional information from you, after how many days does he have to make a decision to register you? Now it's my turn. I'm the one asking you a question.
14 days.
14 days. You remember? Nice. My friend just became an auctioneer. When is he supposed to register for VAT? And does he have to meet the normal threshold?
Supposed to register 30 days after becoming auctioneer.
30 days after becoming an auctioneer. Thank you. I just set up a group company in Ghana and I want to register for VAT. What are the issues around a group company registering for VAT? Nobody's talking. We just learned this. Yes. Group companies registration. Didn't we look at it? Or you have to go and read first? Okay, that's just my name.
I have to balance.
Okay. So that was it. May the Lord be with you. I'll see you Tuesday evening. Have a nice Mother's Day.
Thank you, sir.
Thank you. Thank you.